Hello dear traders, welcome back to Insta TV. You're watching financial news with me, Anna Kasatkina. On Monday, the most popular currency pair on Forex is edging slightly lower as investors are looking ahead to fresh factory order data from the United States. Meanwhile, the eurozone's unemployment rate has dropped to the lowest level in almost 5 years, in line with expectations. A report from Eurostat suggests that the number of unemployed Europeans fell by 39,000 in February. Nevertheless, the European jobs market continues to look sluggish, pointing to persistent economic problems within the region and putting pressure on the single European currency. The Eurozone's unemployment rate came in at 10.3%, printing the lowest reading since 2011. Despite a slight improvement in overall jobs figures, the report reflects a wide scatter of data across European countries. For example, Spain's jobless rate is still above the 20% threshold. Before the global recession hit the world economy, the unemployment rate within the eurozone reached the level of 7.5%. The uncertainty surrounding the European labor market and the impact of unemployment on the region's economy is growing. The euro area is highly exposed to geopolitical threats, in particular those associated with the flow of refugees flooding Europe. The situation is aggravated by external risks, including the Chinese economic meltdown. The US dollar is trading on a weaker footing, finding it harder to resist its European counterpart. The US dollar index remains at its 5-month lows against the basket of major currencies amid investors' concerns over the Fed's stagnant monetary policy. The latest reports from the US labor market on the number of new jobs and unemployment have added to these fears. On Friday, the U.S. Department of Labor reported that the U.S. economy generated 215,000 new jobs, exceeding the forecast for a gain of 205,000. At the same time, the jobless rate climbed to 5% from an 8-year low of 4.9%, thus leading investors to sell off the US dollar. Analysts assume that there is no guarantee that the data-dependent Federal Reserve will lift its interest rates at the policy meeting in April, even if upcoming economic data turns out to be strong. This was Daily Financial News on Insta TV. Thank you and goodbye.